Let me now say a few words about Australia. Hey, how well have we done? Next year it'll be 27 years of uninterrupted growth. That's another world record. So we've got two world records, household debt and uninterrupted growth of 27 years. We'll take that from the Dutch, by the way. And when you think about the steady growth that we've had, around 3% GDP, through all of that period, it's pretty amazing because we have been subject to some extraordinary cycles. If you think about the terms of trade cycle that we've been through, the big boom in the terms of trade in our commodity prices in the lead up to the GFC, and then the slowdown, but then the pickup in response to the Japanese stimulus package, and since then it's all been downhill. So we've had this huge lift in our prosperity and a huge collapse in the price of what we sell offshore, and yet we've been able to tick along at around about that 3% growth rate. So it is testament to flexibility in our labour market, and in particular flexibility in our currency, that's allowed us to maintain that growth momentum. Certainly some things have changed. For instance, this big jump in household debt means that the consumer spending story isn't going back to where it was pre-GFC. Pre-GFC consumer spending used to run at about 4.5%. As people were using the equity in their house as their credit card and were spending at a faster pace than their incomes were growing at. Since then, they've been concerned about the level of debt and they've been more cautious. So we're now growing around 3% rather than 4.5%. And people that are in that industry have to accept the fact that we will be there now for a long time, given the high level of debt that we've accumulated. That's one of the costs that we've paid. Of course, the other big cycle that we've been dealing with has been the mining cycle. Now, the commodity price cycle is one cycle, but the mining investment cycle is another one. Obviously, they're related as those prices went up, so miners decided to create more capacity, and that was one of the reasons why they built more. But that's now well and truly peaked. That peaked at the end of 2012. As some of the big mining projects were completed and there were no new ones coming through. Commodity prices fell, the economics of starting new mining projects in an environment of much lower commodity prices didn't add up, so all these big projects that were completed were not replaced with others. And we're getting to at the end of that cycle now, where Gorgon is now, the big LNG project in Western Australia is now completed. Wheatstone, which is the other big one, is getting near to completion. Ichthys, the really big one in the Northern Territory, is close to completion. All the coal seam gas projects up in Queensland are now completed. So that process is behind us. So we're now looking to be at the bottom of that cycle. So we've negotiated a couple of massive cycles and been able to maintain relatively stable growth. There are other cycles that are coming now to replace them. And the most important one is the red line. I'm a little worried that that's starting to lose some momentum recently. This is our so-called net export cycle of services. So if you look a couple of years ago, that red line was subtracting around 0.5% from GDP. It's now adding about 0.3. So you've got about a 0.8% swing factor in your services export cycle. And what are services exports? They're things like education, business services, leisure and travel that have basically taken off. Of course, as you're not surprised, the reliance here on Asia, and in particular China, is massive. And that's why I made my point before about the risk that I see to this cycle if we were to start to see some constraints coming on China's concerns about the rate at which they're generating deficits in that sector. But at the moment, it's a very, very important sector. And if we think about what's the reason for Australia's existence now that we're not relying upon mining, and we shouldn't denigrate mining. We've got the capacity in the ground now, we'll be benefiting from it, but the investment side, the new growth side is behind us. So what's the new growth? What's the new investment? Clearly it has to be providing services to the emerging Asian middle class, and that's what I call services exports. So that's education, tourism, business services, etc. We're not as good at that as we are at efficient mining and efficient farming, but we've got to get better, because that's the growth future for this economy. Another cycle that we have to rely upon is population growth. Our population growth has recently slowed. I think it's probably got as slow as we want it to go. In New South Wales and Victoria, however, we're not seeing that. New South Wales has never, since 2000 when Bob Carr said he didn't like the Olympics and Sydney was closed, population growth in New South Wales has always been well below the national average. New South Wales is now at the national average of about 1.4. Victoria is at 1.9. And when you think about it, who's been benefiting from this services export story? It's very much been the southeast. It's been the tourism, it's been the education, and it's New South Wales and Victoria that are benefiting from this new cycle. In fact, if you look at any data now, the gap that's opened up in terms of employment, in terms of housing, between the southeast corner and the rest of the country is extraordinary. And so we are really in a strong position in this part of Australia. So we want to keep that population growth going, because that's another really important cycle that we're going to be relying upon to keep the economy moving in the absence of the mining boost. Another cycle that's being very important for us that doesn't get a lot of discussion is infrastructure. So if we look at the recent investment monitor for the value of infrastructure projects under construction or committed in the public transport sector, we can see that that number has jumped for the nation from 40 billion to 95 billion. Now, the 95 billion, to put it in perspective, if you can look at the right-hand side, that's the total value of the major LNG projects in Western Australia, about 100 billion. That's where it peaked at. So the 95 billion in public transport projects is extraordinary. And we look at where most of the growth has been. It's been New South Wales, up to about 51 billion from 30 billion 6 months ago. Victoria also doing well. So this is the other cycle that we need to start relying upon. I said to you before, globally, that's the big mistake that the world is making, not embracing infrastructure enough. I believe it's a mistake the Commonwealth Government is making, not providing enough funds to the states for infrastructure. I think the market would quite comfortably understand the difference between good debt and bad debt. Good debt going into investment, bad debt going into current deficits. But the Commonwealth doesn't appear to have that mindset. But what's happened is that the states, Victoria and New South Wales, have gone their own way and doing this incredibly successfully. You go out to Western Sydney these days and things are absolutely booming on the back of a lot of this infrastructure investment. Obviously, it's related in a way to another cycle that I wanted to talk about.